Ever since the advent of exchange-traded funds, ETFs, they have functioned as remarkably simple and easily accessible tools for individuals to amass wealth. ETFs present a plethora of advantages that cater to both neophyte investors, commencing their journey with modest funds, and astute, affluent investors. Let's delve into the fundamentals of ETFs and explore how they can pave the way for substantial wealth accumulation. Hello, I'm Evan, dedicated to educating people on money, personal finance, and investing. If you aspire to enhance your financial future, be sure to subscribe to the channel and hit the like button if you find this video helpful. An ETF, or exchange-traded fund, is a type of investment fund comprising a diversified collection of securities, primarily stocks. In contrast to conventional mutual funds, ETFs are traded on stock exchanges, making them easily accessible through user-friendly platforms like Robinhood. This facilitates small investors in buying and selling shares effortlessly throughout the trading day, requiring just a few taps on their screens. Whether you have an extra $5 or $55,000 to invest, the process is swift and typically devoid of trading fees. This real-time liquidity makes ETFs an attractive choice for investors seeking flexibility in managing their portfolios. One of the key attractions lies in their user-friendly nature, as buying and selling ETF shares mirrors the simplicity of trading individual stocks, necessitating only a brokerage account. Moreover, they can be acquired within retirement accounts, such as IRAs, eliminating the need for intricate investment processes involving phone calls to brokers. ETFs follow a passive strategy, eschewing the active decision-making approach of fund managers. Instead, they replicate the performance of a specific market index, such as the S&P 500. This passive management results in lower operating costs, as constant decision-making and analysis by fund managers are reduced, translating into fewer expenses for investors. This cost efficiency, coupled with the ease of accessibility, makes ETFs an appealing option for individuals seeking to build a successful portfolio on a budget. While actively managed funds may seem enticing, studies reveal the near impossibility for fund managers to consistently outperform the market, especially considering their high associated costs. The difference in expense ratios, for example, between 5% and 0.5%, significantly impacts the portfolio's value over time. ETFs, with their lower expense ratios, eliminate the burden of hefty fees tied to active management, allowing investors to retain more of their capital. ETFs possess the potential to transform average individuals into substantial wealth holders by delivering profitable returns over extended periods. Although not the most thrilling investment, their stability and consistent returns make them a solid choice for building long-term wealth. ETFs can anchor a portfolio, providing a foundation for a comprehensive investment strategy. Investors can allocate a significant portion of their portfolio to broad market funds like an S&P 500 ETF and reserve a smaller percentage for more specialized or individual stock options. Exchange-traded funds offer a wide range of choices, catering to diverse investment styles. Whether one prefers a conservative or aggressive approach, there is an ETF tailored to meet specific needs. Stability and consistent returns can be achieved through ETFs tracking major indices, like the S&P 500, while those seeking higher risk and reward may explore leveraged ETFs. Investors can fine-tune their portfolios with sector-specific ETFs, aligning with preferences or expectations for market trends. The beauty of ETFs lies in their immediate provision of a somewhat diversified portfolio. While the risk is not entirely eradicated, spreading investments across numerous companies minimizes vulnerability to the performance of any single asset. Unlike investing solely in individual stocks, ETFs offer risk distribution across multiple entities, mitigating the impact of adverse events in a particular sector. For those new to investing or overwhelmed by options, an ETF mirroring the S&P 500, comprised of about 500 companies, can provide diversification across various market sectors. This not only offers exposure to specific stocks like Microsoft, Apple, Tesla, and Amazon, but also ensures a degree of diversification, reducing vulnerability to the performance of any single asset. In conclusion, ETFs and other low-cost funds have revolutionized the world of investing by providing an uncomplicated, cost-effective means of gaining exposure to a diverse range of assets. Their ease of use, cost efficiency, and diverse variations make them an attractive option for investors seeking to grow their wealth with personalized, flexible, and convenient investment strategies.